Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's 10 p.m. Pacific on Saturday, December 3rd, 2022. Let's go. Alibaba Cloud announced a partnership with Avalanche blockchain platform to develop tools that will enable users to launch validator nodes on Avalanche's public blockchain in Asia. This collaboration will support Alibaba Cloud's Node as a Service initiatives. The partnership between Avalanche and Alibaba Cloud will help accelerate the adoption of blockchain technology and decentralized applications in Asia. Through the integration, developers will be able to easily access the resources that they need to launch and manage validator nodes on Avalanche's public blockchain. Now, this will not only make it easier for developers to create and deploy decentralized applications, but it will also help strengthen the security and decentralization of the Avalanche network. Now, in addition to providing the infrastructure and resources necessary for launching validator nodes, Alibaba Cloud will also offer technical support and expertise to developers using its service. Now, this will help ensure that developers have the support they need to successfully launch and maintain their nodes on the Avalanche platform. Overall, this partnership between Avalanche and Alibaba Cloud is a significant step forward for the development and adoption of blockchain technology in Asia. As the largest cloud service provider in the Asia-Pacific region, Alibaba Cloud is well positioned to provide the infrastructure and support that developers need to launch and manage validator nodes on the Avalanche platform. Avalanche hosts over 1,200 validators and processes around 2 million daily transactions. That makes it highly scalable and secure for decentralized applications. With the support of Alibaba Cloud, developers will be able to easily access the resources they need to launch and maintain their nodes on the Avalanche platform. This will help drive innovation and growth in the region. Now, as part of this integration, Alibaba Cloud is offering special promotions and credits to Avalanche developers. This is designed to help them access its services. It will also help make it even easier for developers to take advantage of the benefits of the partnership and launch their own nodes on the Avalanche platform. This partnership is expected to have a particularly significant impact on the growth of DeFi ecosystems in Asia, because Avalanche currently powers over 1,000 projects, including popular DeFi platforms such as Aave, Curve, Benki, Sushi, and Chainlink. With the support of Alibaba Cloud, these and other DeFi projects are likely to see even faster growth and adoption in the region. Now, meanwhile, Bo Shen, who's a venture capitalist and a general partner of the Fenbushi Capital Venture Capital Fund, has confirmed that he lost $42 million from his trust wallet. Shen confirmed that the funds belonged to him and were not related to Fenbushi Capital. Shen also reported the incident to local law enforcement and has involved the FBI and lawyers in the investigation. In a statement, he said that civilization and justice will eventually prevail over barbarism and evil. This is the iron law of human society. It's just a matter of time. Blockchain analytics firm Slow Mist has verified Shen's loss of funds and confirmed that there were no security issues with the trust wallet. It is not clear at this time how the funds were stolen or who is responsible for the theft. And now from a retail giant, let's take a look at a financial giant, because Galaxy Digital has won an auction to acquire the self-custody platform GK8 from Celsius Network. Now, the terms of this deal have not yet been disclosed, but a spokesperson for Galaxy Digital said the price was materially less than what Celsius paid for GK8 a year ago. In November 2021, Celsius acquired GK8 for $115 million, so it sounds like they got a good deal. Now, GK8 is a platform that enables users to securely store and manage their own digital assets without the need for a third-party custodian. And this acquisition is expected to allow Galaxy Digital to expand their offering of self-custody services to their clients. Galaxy Digital's acquisition of GK8 is part of the firm's plan to expand its prime brokerage offering. As part of the deal, around 40 people will join Galaxy Digital's team, including blockchain engineers and cryptographers. This acquisition will also expand Galaxy Digital's global footprint with the opening of a new office in Tel Aviv, Israel. Galaxy Digital founder and CEO Mike Novogratz said in a press conference that the acquisition of GK8 is a strategic opportunity to grow the firm in a sustainable manner. The deal is subject to regulatory approval. This comes after a downturn in the cryptocurrency market led Celsius Network to file for bankruptcy protection in July. And as part of its bankruptcy proceedings, Celsius put several of its assets up for sale, including GK8. Now, this isn't the first time that Galaxy Digital has attempted to expand its prime brokerage offering through acquisitions. In August, the firm abandoned its plan to acquire crypto custody specialist BitGo for $1.2 billion. BitGo claimed that Galaxy Digital failed to provide financial statements by a deadline of July 31st, which prompted BitGo to sue Galaxy Digital for damages in September. The Opera browser has a new NFT creation tool. This tool is part of the company's efforts to expand its presence in the crypto space and provide users with more options for using and interacting with digital assets. The integration of the Launchpad into Opera's crypto browser makes it easy for users to create and manage their NFTs without the need for coding knowledge or technical expertise. This NFT creation tool is set to launch in January, and it will enable users to drop media files into the Launchpad, preview them, turn them into NFTs, and then share, store, or sell them. This will provide a convenient and user-friendly way for users to explore the potential of NFTs and their applications in the digital world. Now, overall, Opera's NFT creation tool is a welcome addition to the growing ecosystem of blockchain-based platforms and applications, and it is likely to be well received by both crypto enthusiasts and the broader crypto-curious community. Susie Batt is the crypto ecosystem lead at Opera, and she said, quote, "We are giving users the opportunity to contribute freely to this ecosystem. Now, our users will be able to create NFTs instantly and simply with no platform usage fees." Opera's NFT creation tool is just the latest in a series of moves by the company to expand its presence in the crypto space. In November, the company introduced DGen Knows, an NFT analytics tool that allows users to discover and track collections of NFTs. This tool provides on-chain data such as trades made by large investors, as well as social signals such as the collector's social media presence and interest among NFT insiders. Opera's crypto browser was launched in January, and it has been well received by the crypto community, and the company hopes the introduction of the NFT creation tool will further enhance its appeal. With more than 350 million users of its various browsers, including the original Opera browser, a Chromebook browser, a gaming-focused browser, and the crypto browser, Opera is well positioned to make a significant impact on the NFT market. VV Ventures is a venture capital fund, and they have reportedly reached a deal to acquire the embattled cryptocurrency exchange ZipMex. Now, VV Ventures is set to purchase a 90% stake in ZipMex for about $100 million in digital assets and cash. This is according to anonymous sources cited in a Bloomberg report. The VC fund will reportedly pay $30 million in cash and the rest in crypto. This transaction is expected to unlock frozen customer accounts on the exchange by April 2023. This is according to a court hearing in Singapore. Now, this deal between VV Ventures and ZipMex comes weeks after the two companies were reportedly on track to sign a major buyout agreement. And we covered it on this show when ZipMex abruptly halted withdrawals on its platform in July 22. At that time, they cited, quote, "a combination of circumstances that were beyond its control." Now, the exchange, which has operations in Thailand, Singapore, Indonesia, and Australia, subsequently started a restructuring process after getting 3 months of creditor protection from Singapore's High Court. ZipMex has also filed applications to extend the moratorium until April 2023 to support the restructuring efforts, which is pending consideration by the Singapore court. Despite facing major issues, ZipMex has apparently continued offering some of its services after partially resuming withdrawals. According to ZipMex's website, the exchange has been altering some of its withdrawal fees as well as listings over the past 2 months. The announcement of the deal between VV Ventures and ZipMex comes shortly after Thailand's Securities and Exchange Commission accused the crypto exchange and its co-founder of violating local laws. The authority specifically argued that ZipMex had not provided information on digital wallets and crypto transactions in compliance with the country's Digital Assets Act. A judge with the Seoul Southern District Court has reportedly set aside arrest warrants for Terra co-founder Shin Hyung-sung, along with 3 Terra investors and 4 developers. According to a December 3rd report from South Korea's Yonhap news agency, Judge Hong Yin-pyo said that there was little risk of Shin or the Terra associates destroying evidence related to the case against the crypto firm, and dismissed the warrants that the Seoul Southern District Prosecutor's Office issued on November 9th. This report added that the Terra co-founder Do Kwon, also facing legal action in South Korea for his role, was unlikely to return to the country. Authorities in South Korea arrested Terraforms Labs' head of business Yu Mu in October, but Judge Hong dismissed the warrant in a similar manner within 48 hours. He said it was difficult to see the necessity and significance of the arrest. In contrast, Kwon was still the target of lawmakers and regulators, having his name added to Interpol's Red Notice list and no longer having a valid South Korean passport for international travel. Now, Kwon has continued to be active on social media following the collapse of Terra, despite many crypto users directly blaming him for their loss of funds and the events surrounding the current bear market. In September, the Terra co-founder said that he was, quote, making zero effort to hide from authorities. He subsequently spoke with the infamous hedge fund manager and pharmaceutical head Martin Shkreli on a Twitch podcast discussing FTX and life in prison. Genesis and its parent company Digital Currency Group are in hot water over $900 million in funds allegedly owed to Gemini's clients. This is according to a report from the Financial Times. The issue arises from the dramatic collapse of FTX in November. Gemini operates a product called Gemini Earn, which is a partnership with Genesis that allows investors to earn up to 8% interest by lending out their crypto, such as Bitcoin. On November 16th, Genesis suspended withdrawals due to, quote, unprecedented market turmoil. They also disclosed that around $175 million worth of funds were stuck in an FTX trading account. The company is reportedly having difficulty raising money for its lending unit, but has refuted speculation of its, quote, imminent bankruptcy. The same day, Gemini Earn started experiencing issues with deposits, according to the exchange's status page. The product remains unavailable at the time of writing, although all other Gemini services, such as the Exchange Trading Engine and the Gemini Credit Card, are still available. Now, Gemini has formed a creditors committee and is working to recover the funds from Genesis and the DCG, according to this report. In an effort to restore clients' trust and calm fears of a contagious spread following FTX's fall, Gemini announced its Trust Center on November 9th. Now, this is a dashboard showing metrics for funds held by Gemini and on the exchange's behalf. However, in the Twitter thread about the Trust Center, clients of the Earn program stated that they would regain their trust once withdrawal earnings resumed. Gemini's Earn program was launched in the United States in 2021 and now operates in over 65 countries, including new places like Croatia, Cyprus, Czech Republic, Denmark, Hungary, etc. Now, staying with Genesis here, because they received a $1.15 billion investment from Alameda Research over a 9-month period between August 2021 and April 2022. Now, this investment was made before the recent downturn in crypto prices. This was revealed in documents disclosed by Bloomberg on December 3rd. The capital was deployed in 4 different installments of $100 million, $550 million, $250 million, and $250 million. The investment in Genesis Digital was among the venture decisions made by Alameda. It was also revealed that SBF acknowledged his participation in this decision despite initially denying it to regulators. Now, Genesis raised $556 million in 2 separate founding runs last year to fuel its growth plans. The funds were used to purchase 20,000 Bitcoin miners from Canaan, to build a new data center in Texas, and to expand its operations in the U.S. and Northern Europe. However, the mining industry has been struggling with rising energy costs and a bear market. A recent report from Hashrate Index showed the revenue earned by Bitcoin miners fell to a 2-year low of $11.67 million due to poor market performance and increased computational demand. The ongoing crisis at FTX is expected to prolong the current crypto winter as investor confidence erodes. A Coinbase report shows that the stablecoin dominance has reached a new high of 18%. This indicates that liquidity crisis may extend until the end of next year. In staying with Alameda research here, because it came out that they were given outsized borrowing limits compared to the other clients of FTX. This is according to SBF. And while he didn't specify how large these limits were compared to the other clients, he noted the possibility that they continued after FTX's founding. The large borrowing limits reportedly stemmed from Alameda's role as a main provider of liquidity on FTX. SBF said, quote, "If you scroll back to 2019, when FTX was first started, at that point Alameda was 45% of volume or something on the platform. It was basically a situation where if Alameda's account ran out of capacity to take on new positions, that would lead to risk issues for the platform because we didn't have enough liquidity providers. I think it had fairly large limits because of that." He said that by 2022, Alameda accounted for only 2% of the trading volume on FTX. He also said that Alameda's liabilities to FTX were about $10 billion at the time of its bankruptcy filing. This is the latest in a series of admissions that Sam Bankman-Fried has made to the media since FTX filed for Chapter 11 bankruptcy. On Wednesday, he told the New York Times that he, quote, "messed up big" and took responsibility for the lack of oversight that led to Alameda's researchers' risky positions with FTX. In an ABC News interview on Thursday, the former FTX CEO admitted that he didn't spend any time on risk management. And I think that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.